Market not open today, and we'll convene again on Tuesday morning. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that, we're off and running. What happened last week? Let's take a look at the indexes and see exactly what they did as far as their moves for the week. As we can see, looking at the S&P, looking at the Dow, looking at the Russell, and looking at the NASDAQ, we see that for the week, the percentage change was basically flat. And so what we looked at last week was a consolidation week in an uptrend. See that our moves for the year certainly are unsustainable, as we're approximately 6 weeks into the overall year. And we see that moves of anywhere from 7 to almost 9% in that length of time is not sustainable, and we will have pullbacks. The question is when. Well, basically, you can pretty well consider that we're headed for those previous all-time highs in the Dow and maybe in the S&P also. So for the week, we see changes with very, very little magnitude in our moves, and basically had a flat week, basically ended up where we started. Looking at the next week, what kind of economic announcements do we have? Well, today, President's Day. All markets are closed in honor of our presidents. Tuesday, we see that we have very little economic announcements coming up. Housing market coming up at 10 o'clock. Then looking at Wednesday, we see that we have another housing starts in report coming out. PPI coming out on Wednesday, certainly capable of moving the market, which takes place at 8:30 before the market opens. And then we come into the CPI. The Consumer Price Index comes out on Thursday morning. Our normal morning, Thursday morning jobless claims, which tells us about the previous week and what the employment numbers are. We got PMI coming out before the market opens, and then again, as we continue that theme of housing, we got existing home sales coming out on Thursday at 10, Philly Fed coming out at 10 o'clock, and we got economic leading indicators. So quite a few announcements on Thursday, certainly capable of moving the market. On Friday, you see that we have absolutely nothing in this holiday shortened week of trading. But also remember, anytime we have a holiday shortened week and we have Monday off, that gives us an extra day of theta burn for the weekend. So it's like free money for those of you that know how to make money as the market is closed. If you do not know how to do that, contact Options University. Will be happy to teach you how to do that. Looking at the SPX for the week, we see that overall our trend is up. We've been continuing straight on up since we had the solution to the, well, whatever they want to call it, solution to the fiscal cliff. Notice that we're following this trend line straight on up with at the top of the Bollinger Band. No real pullback since the fiscal cliff had its solution right there at the beginning of the year. And we see that we've had a long overbought situation in the market. It will pull back, but obviously they feel they're a little behind and they're catching up on some of their positions. We can expect a pullback at least to the 30-day and potentially to the 50-day moving average when it finally does. But meanwhile, we are in an uptrend and an uptrending market with a consolidation for the week. Let's take a little closer look at the week by looking at a 1-month chart where we see that we had very narrow trading range for the entire week. There's our 5 days of the week right there. And we see that basically the market would end just about where it opened each and every day as the week went on, as we had these very small net trading ranges for the day as the market went absolutely nowhere. Let's see what the Dow did during this time. Looking at the Dow, we see that the Dow also had been consolidating a while. Dow is sitting right below 14,000 as we go into this new week. And we see that if it breaks out, it's got a bit of a move to break out. It's only a couple hundred points away from its previous high as we see the Dow leading the market up. And this week, what did we do? Consolidated, very much looking like the S&P. The NASDAQ, our laggard index, because of course Applenomics is no longer having its big effect on the market. And we see that if we look at the previous week, we see that we had basically a sideways movement waiting for the Dow to make its move to break up into newer highs. And you can expect when the Dow and the S&P finally make that break up, we may see the NASDAQ move a little bit higher, but nowhere near its previous all-time highs. NASDAQ isn't going to get there at this point. Looking at the Russell 2000, we see the market which showed us the greatest strength since the beginning of the year as it continues its upward trend, just climbing. And remember, this will continue to do this until it stops. So will it stop? Of course it will. Will be some kind of news? Well, remember, March 1st, we have, again, the sequestration approaching, where we're going to have these automatic cutbacks if Congress doesn't do something to work on the debt limit. And we'll see exactly how that happens and when it happens. And that could have an effect. That could be what pulls the market back so that we have a more normal market. Looking at the VIX, well, as the market's going up, we expect the VIX to go down. What kind of fear is there in the market? Well, looking at the VIX, we see that we're basically at very, very lows below that 15 level. And in fact, we're down at 12.5. 1250, so very, very low VIX. And you notice when you are selling or buying, there's not a lot of volatility in your options, and so it has an effect on how much risk we have in our trades. However, the risk doesn't change until the fear in the market changes, which will provide greater volatility at some point. Looking at the bond market, what did our TLT do for the week? Well, it went basically sideways, certainly in a downtrend, as the bonds have been following that what we would call normal trend as the bonds go down as the market goes up. So usually we have that inverse relationship between the two. Let's take a look next at our ETF for financials. And looking at our financials, we're going to take a look at XLF, our ETF for the financial market, and notice it's continuously upswing as it continues in this long-term uptrend as the financials try to beat their way back from that major recession that we had, and our banks get healthier and healthier with any kind of luck. Next, let's take a look at oil. Notice that gas has certainly been shooting up here in Florida. Let's find out what oil is doing by looking at USO, and we see that, it's been going sideways, and the fuel prices seem to have been going up at the gas pumps. Kind of interesting as we see oil going basically nowhere. So we're at some highs, but doesn't give us a good indication on what's happening with gas. But we see that we're kind of in a trading range, and we'll see whether we break one way or the other. Oil trying to get in that positive move as we see it after the first of the year began to take off and continue with the overall market. Big pullback on Friday as we saw a large trading range for the day in oil. All right, where's that safe haven that people like to go? Let's look at GLD, our ETF for gold, and we see that not a lot of fear as look at that drop down as gold is not any big move as the market continues up. We'll see this spike back up as we see if we see some fear come into the market, as it gives them that safe haven where they don't have to have the same fear that they do when the market is headed down. And finally, let's take a look and see what kind of volume we had for the week as we look at the spider. And we see that, wow, look at Friday. Big volume, really went absolutely nowhere, but certainly had a volume spike on Friday. All right, well, what will the next week have to provide for us? Well, we're going to take a look at our stocks to watch, but overall, we can say we are in an uptrend. And for those of you that are gold members, hang around and we'll go through some of these charts, see what they did during this previously flat week, and see where we expect things to go as the week goes on. It was an interesting week in the market, and the week could provide, and this week could provide an interesting move as we have plenty of announcements coming in as we approach March 1st with the sequestration. So, for those of you that are gold members, we'll continue with our list of stocks to watch. For more videos from Options University, go to www.optionsuniversity.com/free gold. Ladies and gentlemen, thank you so much for being here. This is Butch Shorrock, Options University. Gold members, hang around. We'll continue on. It's Monday, February 18th, 2013, a 4-day trading week as Monday is our day off for President's Day. Good morning, ladies and gentlemen. To our gold members, welcome back. Let's take a look at the week that was. And so let's take a look and see exactly where we're headed when we talk about this S&P. Resistance for the S&P, all-time highs at 1576. Whether we'll reach that or not, we'll have to wait and see. If we blow through the Dow's high, which we're only about 200 points away from the current all-time high in the Dow. If we blow through that Dow high, we may have a pause there and then continue on up. Our next target will be 1576. So as we go into this next week, let's carefully watch the Dow and see what happens when we hit that all-time high for the Dow. My personal feeling is we're probably going to see that 1576 take place here within the next month or so. Again, the sequester may cause us some issues as we're moving forward here in the next week as we come towards that March 1st deadline. Currently, Congress isn't back in session yet, but they will be shortly and begin working on that very issue. Let's take a look at our stocks to watch as we look at the previous week. Looking at Amazon, we see that it went sideways and it's been in a bit of a sleeping mode since earnings. Earnings, remember, can change everything, and it certainly changed Amazon as it used to last quarter. It was used to just going up and up, and we see that we've had a bit of a pullback to that 50-day moving average, and we've kind of flattened out with Amazon in a trading range. And we may need some news or some other earnings in order to see this stock gain some of its previous glamour. In the meantime, going sideways, certainly a product that you might look at for condors and to pull time out of the market. Next, let's take a look at Apple, and we see Apple also has done the same thing. Apple, in a downtrend, has not found any of its previous glory, as Apple has had some problems with production. Apple's had some problems with its source line, and so therefore it shows in the stock price. Will Apple resurrect from this point? Well, we will see. Apple is basically due for some new kind of product, as all they're doing at this point is reworking some of their older products. So we'll see if they have something in the pipeline or if some of those glory days are gone. A company like this needs to continue grow, or it ends up taking on some of the stagnant movements that you see in companies like Microsoft and some of your big companies once they get to a certain size. So verdict's out on Apple as it's not leading the market up anymore at this point. Looking at AutoZone, we see as the week went on, it went up, reached very close to its previous high of 3 months, and had a nice little pullback to the 200-day moving average. And we'll see. Watch this carefully this week, as if we get a higher high and higher low, this may be continuing up further. Earnings are coming up shortly on AutoZone, so keep an eye on that. One of my own personal rules is to not hold through earnings. Next, let's take a look at our food companies, and we see that as the market went sideways, this one had a little bit of a downtrend to it. It may go down, hit that 30-day moving average look as it continues up. Here's the big one. that we had a nice move up after earnings, and it tells you exactly where the big boys felt. These are your telltale signs as to how they feel about whether these stocks should be accumulated or not. Taking a look at Google, been a market leader, and as the market has gone up, this thing has gone to new highs, approaching 800, expected to go above 800 this week, and we'll see if it continues to keep breaking out to the upside. Earnings were impressive, and so this stock was for this quarter should show us the kind of leadership that we expect out of a company like Google. Green Mountain Coffee, what did it do during the last week? Actually went up a little bit as the market pulled back. Earnings were okay. Not any big disappointment there. We may get some sideways movement. Target on Green Mountain Coffee is up there around 50. So see if we can get a higher high and a higher low this week. That give you another entry point on Green Mountain Coffee. All right, next let's take a look at ISRG. Great earnings, certainly had a nice gap. That gap has not been filled yet. It will be filled someday. Look for a breakout to the upside on ISRG, or look for it to go down and then look for that bounce. And when you get that bounce, we get back in because they were very happy with earnings on ISRG at this last earnings announcement. Looking at MasterCard, what do we see? Sideways movement, no big moves out of MasterCard, as we see that it's going to need some bigger movements in the market. This had quite a run after the fiscal cliff and after the announcement from our Fed chief, Bernanke, that gave this company a big boost in the last couple quarters. Let's look at another food company. Looking at McDonald's, we see that McDonald's has pulled back to the 30-day moving average. As we go into this week, look for a higher high, higher low. In fact, we had one on Friday, which gives us a buy signal on McDonald's. And remember, anytime you get into a new position, know exactly how much risk you're willing to take and where your stops are. All right, for these swing trades. Looking at Nike, we see that Nike is approaching highs. Look for a breakout above this previous level. If you see it with volume, don't be afraid to get on this horse and ride it, as Nike can keep doing it if it chooses. Priceline, we see that Priceline certainly has shown us nice movement. It went kind of sideways for the week. It tends to move with the overall market, so watch Priceline as it may give you a new entry in this coming week for another short-term swing trade. Looking at WW Grainger, which way does that want to go? Up. It's picked up some of its glory that it used to have. Look for this to head towards all-time highs. As we see during the week where the market did nothing, what did this stock do? It headed right on up in a nice move. Any kind of pullback on WW Grainger, time for an entry on this stock that tends to just keep moving. One of those stable stocks in our economy that just keeps pumping along. So that was the week that was, the week that's to come. Looking at our new stocks, we see that we have plenty of opportunities there as the market continues looking for new highs. Will we have a pullback? Yes. Could it take place in the next couple of weeks? We may see some kind of stall take place because of the sequestration, which will give you nothing but whole new opportunities with high probability on your side. Market's happy. They are accumulating stocks. It is a bit overbought. Time for a bit of a pullback, but it's been due for a while. So with that thought, this is Butch Shorak. It's Options University. It's Monday, February 18th, 2013. Abbreviated trading week this week, and so trade well, look for your entries, and know what your positions are, when you want to get out, what your targets are, and what your stops are, so that at the end of the month you can look into the mirror and say, it was a good month. Thank you for being here, ladies and gentlemen. Butch Shorak.